You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for the option block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a little thing we like to call around here, the old Options Insider Radio Network. Quite a few programs for you guys to choose from, a baker's dozen right now, 13 for you guys to go through and check out at your leisure. The easiest way to do that, of course, the mothership, the flagship, theoptionsinsider.com. Surf on over, click on the Insider Radio Network tab, top left corner of the page, and you're pretty much off to the races. Just check out the show you want on that overlay. Click on the button. You can download, you can stream until your heart is content. Of course, you can also find us via all of your favorite platforms, iTunes, TuneIn, Stitcher, etc., soon to be on the Google Play Store for podcasts. Whenever that actually goes live, I'm not sure. We'll keep an eye on that for you, listeners. And if you are so inclined to get your shows via those platforms, of course, you can grab them there as well, or you can get it all baked into one with our mobile app available for iOS, Android, even the burgeoning, exciting, ever-popular Fire OS. So check that out, listeners, as we keep on rolling. And, of course, also, a lot of you guys loving the live stream last time, so we're adding a live stream yet again. It was such a hit with our Option Block 500th episode spectacular that you too can listen live. I know quite a few of you are doing so already, and more to come as we get a regular schedule. We're kind of just kicking the tires right now, but it all keeps going well like this. We're probably going to keep doing this live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, for all of you who are so inclined to check out the show live, see how the sausage is made. And, of course, the best part, of course, we have a little chat room that goes along with it. It's all available via the MixLR or Mixler. Call it what you will. The app is available on every platform. You can also go to the website and check it out. We also tweet out that link. We put it out via our Facebook, stock twits, etc. So you can click on that link via those platforms and follow us along live. We love to hear from you guys. And speaking of the guys, I am also joined on this program by the usual cast of characters. Not quite the expansive extravaganza panel we had in Option Block 500, but again, that was a special occasion. We'll make do with what we got, starting off with the man beaming in from the great state / principality / duchy known as Maine. We have the Rock Lobster himself, Mr. Andrew Giovinazzi from the old Option Pit. Mr. G, welcome back to the program, and have you come down from the ecstatic high that is Option Block 500, sir?
I have to say the show was quite fun. I'm sorry I had to leave it early, or mostly just because Mark was taking up all my oxygen, so there was no room for me to say anything. But it was quite a nice show. I liked having Grigas in the background. He was kind of just lurking there in order to comply with compliance. He is the man that can be in the room but shall not be able to speak. I thought
he who shall not be named.
Too funny. And you know what? The Viceroy has lost none of his step, by the way. None.
I think he was invigorated by not having spoken in about 6 months or a year, however long it's been.
Oh, my gosh.
He was wound up.
it was like he never left. He just popped right back in, got back on his horse, and started riding that bad boy all the way. I did enjoy the show. I think the potential for the live stream is going to be big. I think it'll be fun, and I hope listeners enjoy it. I think it'll be a good thing. Very, very, very pumped for 2016 and the Option Insider Media Global Conglomerate.
From your lips to God's ears, sir. I like it, though. The Global Media Conglomerate. We're just calling it very conservatively the Media Group. Global Conglomerate. Maybe that could come down the road a little bit. I like the way you think, sir. And also joining us, not in person this time, but from the Sleepy Hamlet, of whose tourist brochure, I should say, I still have on my desk here. None other than Uncle Mike Tosaw beaming in from RCM Wealth Advisors by way of scenic and lovely St. Charles. Uncle Mike, welcome back to the program. A shame we don't have you in the studio yet again, but it was a spectacular. How about you? Have you come down from the epic high that was OB 500, sir?
I'm even higher because now we're even closer to episode 1000. We're more than halfway to episode 1000. What could be more invigorating?
I like it. To you, Andrew, and you thinking big. I like it. So with those thoughts in mind, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what's moving, what's shaking, what was rocking and rolling on the old street today and in the broad markets. We are, of course, recording this on Monday, February 22nd, for all of you playing along at the home game. Of course, for all of you streaming live as well, welcome via the Mixlr chat room. You can always fire off your questions, your comments, your insights, your jokes, whatever else you want to share with us via that little platform as well. I do believe you have to be logged in to Mixlr, but you get the app. You can do it all there. It's pretty cool as well. It makes it easy to stream. And if you want to ask questions or comments, just log in and ask us. We love to hear from you guys. And of course, setting the tone this week, kicking it off in high green gear. I was going to say, easy for me to say, high green gear this week, with most of the major indices rallying hard this Monday, up about 1.5% or right around that range. S&P up 1.4% or just a tick under 27 handles here to about 1944. So, and the Dow, a bit of a laggard, only up, I should say, 1.3% here to about 16,609. And of course, the tech-heavy Qs up about 1.5%, leading the charge to the north today, which is a bit of a change. Tech seems to be leading to the upside or the downside. Whichever way it's going, tech seems to be leading the charge of late, and that certainly was the case yet again today with a strong move to the north. And of course, all this rally mode means volatility was in exhale mode, shall we say, even coming off the heels of the weekend, going off about 1.3 handles out there in VIX cash land, hovering right around 19.25 or so coming into the end of the session. So a lot for us to sink our teeth into. Still a few earnings firing off at the top of the show as well. Maybe we'll get into those as well. By the way, for those of you streaming live, if you are so inclined, we do have we just put out our options question of the week, and those of you listening on the on-demand version, you can also play along as well. Just surf on over. If you're not following us already, follow us at Options on Twitter. We put out our question of the week, and this week, even though earnings season winding down, we want to know what you guys think about earnings season, in particular how you approach it from a general options perspective. We debated this many times on this here program, long premium, short premium. Now it's your turn. Take our question of the week poll. How do you prefer to trade earnings announcements using options? Your choices are long premium, short premium. I avoid earnings, which, spoiler, seems to be winning right now. I guess people listen to our show. And about 14%, 60% saying I avoid earnings, about 13% saying tie, 13% long and short premium, so tie there, and about 14% saying other. I don't know what their others are. We asked them to explain. They don't always do. Twitter, the medium of short content. But that said, if you haven't put your vote in, go to Add Options, vote. You have until the end of the week. It's our question of the week, after all. And if you're listening after the fact, do the same. Surf on over. Let your voice be heard. We'll discuss it. We'll debate it on this program, other programs on the network. And it's just fun to get your feedback. Speaking of feedback, we'll start in the realm of the lobster. Mr. Lobster, feed us back on the day that was. What caught your eye in today's activity, sir?
I believe that VIX closed for a low in 2016 today. How about that?
You might very well be right, sir. Let me keep looking into the charts while you keep going, and I'll see if I can dig that up.
I'm pretty sure we had a low close. And I'm not really sure what kicked off the rally, because I'm not really sure what kicked off the sale, the mass selling. All I can think of is that, like, I've got my pet theory about volatility needs 3 good things to cycle. We had kind of the European bank scare, didn't really pan out. We had China imploding. The equity markets have been really volatile, but it doesn't look like the economy was as bad, because they kind of ham-fisted some currency moves that all started in August, when they just started unilaterally devaluing the yuan. And then we've had the sort of on-again, off-again issues here with oil. Where's oil? Where's it going to be? Are all these companies going to go bankrupt? It doesn't look like it's been. It was as heavily securitized and bet against as during the financial crisis, meaning a lot of people taking the other side of oil paper. Maybe people aren't as stupid as they were in 2008 and wanted just 20 basis points of yield for humongous risk. I maybe people still want that, but as it stands right now, it doesn't look like that. OPEC with whoever would have thunk it, OPEC and Russia. Anyway, all these little things seem to be taking the volatility out of the market. Oil price stable but lower, people can deal. No European banking crisis, people can deal. Chinese government seems to be getting their act together. So all of a sudden you have less of these volatility-inducing things, and when they kind of put them all together, that kind of gave us that nasty brew of volatility we had. And now, as all that stuff sort of goes away, vol starts coming in. But we're having huge realized vol moves still. I mean, we moved up 1.5%. If we were down 1.5%, VIX would be 25 again, but it's not. We still got huge moves to the upside on I guess, fairly thin volume. So we'll see if the rally sustains. However, they are aggressively selling out premium. And I thought that was the most interesting thing. That with equities tied to commodities, miners and stuff like that, it looks there like the realized vol's off the hook in there too. So a lot of squeeze potential. A lot of people may be betting things are going to zero, might not necessarily be going to zero anytime soon. So that usually gives us more volatility in the names.
Speaking of volatility, you were correct, sir. Today is indeed the low close for the year. It was pretty close. It was neck and neck with the beginning of the year back on the 5th of January when the VIX cash closed at 19.34, just a tick above where it went out today. So close neck and neck, but you were correct, Mr. Rock Lobster. So well done, sir.
Thank you. Thank you very much.
You know your VIX data points, sir.
You know what? When you look at it all day long, somehow it does start to sink into your head. Somehow, some way.
Maybe ice rinks, not your bag, but VIX data points, I'll tip my hat to you, sir.
The ice rink was a huge failure.
I did see your Facebook picture of it, and it brought a single tear to my eye, sir, for your pain.
Just the big expanse of water.
So now it's a fishing pond, right? Just, every cloud has a silver lining, right?
Exactly. Well, the kids can hunt for frogs, I guess, in about another month or so.
There you go. Frog hunting, whatever it is you folks do for fun over there at Maine, because it sure as heck ain't ice skating, at least not with this weather we got over here. Turning our attention not to Maine now, but to the sleepy hinterlands of Chicago, where we find our friend Uncle Mike Tosaw beaming in from that action-packed hamlet of financial mecca, if you will, known as St. Charles. Uncle Mike, a lot cooking. What caught your eye in today's activity, sir?
Well, a couple things. I did get an email from one of our listeners committing to come to Scarecrow Fest in St. Charles after our 500th episode.
There you go. I told you we're going to get the one bump in tourism, which will double St. Charles tourism this year.
Oh, you know nothing of which you speak. Wait until you come here at some point. You will see how beautiful this place actually is. But excuse me. On another note, some things that caught my eye today. The first one, I don't have a position in it, but I'm just kind of looking at it as kind of like a bellwether. If someone really wants to take a serious gamble on oil, buy Chesapeake Energy, CHK, oil and natural gas. Today, that stock was up almost 20%. Now, once again, I have no position in it. And the reason I just even look at it all is because of the fact that a few years ago, we used to sell covered calls on it. And we had some moderate success in it. We took in some premium. I think we were overall profitable on it. But one thing that I'm noticing about it is that there's a lot of bad things going on with the company in general. They're very leveraged in both oil and natural gas. But if oil and natural gas come back, they're very leveraged in oil and natural gas. And so it's one area with which it could contain some serious benefit to it. So with today going up from $2 to $2.39, that's a 20% move in a day on a stock that isn't necessarily a stock that you've never heard of before. However, it's become pretty close to that based on its performance in recent months. So that's one thing with which it caught my eye. The other thing is definitely oil. I think today is an oil-driven rally, so to speak, in my humble opinion, just because of the fact that oil's up 5% on the day. XLE in and of itself is up 2.5% on the day. So I believe that the spike in oil prices is what's driving a lot of today's rally. The other thing that kind of catches my eye at this point is gold, the shiny stuff. I'm not sure if I really got a chance to mention it on the show the other day, but we did get stopped out of gold last week. So I have a very unshiny portfolio right now in that we have absolutely no gold holdings. But with that being said, the fact that oil's going up, gold's going down, a lot of times in years past, you see those two commodities kind of move in lockstep, but it's not the case at this point. The other thing that's kind of odd about today is the fact that with the stocks going up as they have, we've had virtually no movement in bonds today. TLT is down only 6 pennies. So we've had kind of a mixed ticket in a lot of things today. And usually when you have things like that, there's going to be something's got to give later this week, I would think, in that perhaps bonds are going to catch up to the fact that they didn't go down today if stocks continue to go up. Or maybe since today was just an oil-driven rally, perhaps stocks will go down significantly. Not sure, but if you're banking on, the point to all this is that if you're banking on this to be the start of a big rally in stocks or a big rally in oil or something like that, I would hold off on that just because of the fact that things didn't really move like they normally move in today's marketplace.
And stopped out of the shiny stuff. Wow, you were letting it ride high for a while. Puts off, just going the poor man's option route, which is stopped out with a stop order. How old school of you, sir? But apparently that stop order kicking in today. No more shiny stuff for Uncle Mike for the foreseeable future. You got nothing working on the downside? No puts or anything to get you back in if this route continues?
For right now, I'm taking a break from it. And by that, I mean, I'm looking to get back into it at some point. What my price point is, I don't know it as of yet, but what I'm looking at is I think that gold really is going to struggle to get above the 120 level in the near term. And until to the upside, I won't buy into the momentum, so to speak, unless we pass 120. And if we pass 120 in GLD, then you know what? We've had a 15% gain in the product, and a near 15% gain over the course of the last couple months. I'm okay missing out on some of it to get back into it. But to the downside, I'm still looking for a good price point to get back into it, but I will be selling some puts or something along those lines within the next few days.
Speaking of things that are popping off right now, it is still, it seems like it's pretty much done, but we are still in the tail end here of earnings season. A few interesting names of note coming out after the close today. Probably most relevant to a lot of our listeners is good old Fitbit, ticker symbol FIT, closing today right about 16.5, up nearly $1, which was a decent rally in them throughout the day. They were kind of hovering way less than that for most of the session. Then by the end of the day, just getting a nice little lift there. Clearly some love, at least going into the end of the day, but we'll see how that held up in the after hours in a minute. They were pricing in a pretty hefty move going into this, and they were pricing in close to $3. So almost 18% 18% on this name that they were pricing in. So clearly expecting a bit of a rockin' and rollin' going into this announcement. Looking how the paper lined up today, nearly 2-to-1 calls over puts, which is interesting given the recent history of Fitbit. If you've been watching this name, you know the past 6 months haven't really been too nice, too kind to good old FIT. They were trading as high as they just briefly flirted almost with 52 last summer. Here they are closing today 16.5, so a pale shadow of what they were not that long ago, mid to late summer, is when they were hovering with the glory days, the glory levels of 52. So apparently maybe our friends out here in earnings season perhaps betting that there was more upside to be had, either that or overwriting the heck out of this thing, thinking it's going nowhere but south. And at least if that was the bet, that appears to be the winner, at least so far here in the after hours, with the stock taking a decent dive here, hovering about 1432 right now, off about 220 or so in the after hours, so a little bit over 13%. So that straddle still overdone, but not by much. So it seems like perhaps the first blush here, first take on the earnings market, not loving this, Mr. Rock Lobster. Maybe, who knows? Fitbit kind of feel bad for them. Like a lot of the pioneers in any space, they kind of created the fitness tracker space. And the first one I ever had years ago was a Fitbit, one you click on your belt. And since then, others have kind of come in and moved into the space. You know, the Apple Watch is a fitness tracker now. Every smartwatch is also a fitness tracker. Kind of got to wonder, Mr. Rock Lobster, if indeed like smartphones kind of gobbled up PDAs, if smartwatch is going to gobble up the dedicated fitness tracker market, in which case that's kind of going the way of the dodo. They launched their own smartwatch recently, apparently at least not resonating with the street. Any of your crazy chat folk over there in the pit chat loving Fitbit today? Any talk about that today?
For the most part, people like the item, but not the stock. That's the...
They like the bands, don't want to touch the stock, huh?
Exactly.
I'm kind of with them. I like the items as well. Yeah, I'm not so bullish even at these levels on good old Fitbit here. That was looking pretty rich today, and it seems like that may actually come to pass in terms of some downside left to go here in good old Fit. And this is, you've been following this name, of course, not an old name, listeners. They did an IPO not that long ago, so has been a bit of a bumpy road for good old Fitbit ever since they went public. We'll keep an eye on this one and see what is cooking off. Speaking of cooking off, it's time for us to keep on rolling into the segment where we break down all that fun stuff, what was catching our eye in today's markets. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funky tune means it is time once again for the Odd Block, the portion of the show where we break down what was catching our eye in today's activity from an options perspective. Maybe some of the weird, the wild, whimsical, downright head-scratching paper that caught our eye outside of Fitbit today. Let's move on into some other names that caught our attention. Let's kick things off in the realm of the fun to pronounce names. This goes Zoetis, I suppose I'm pronouncing that correctly. Zoetis, Zoetis Inc., ticker symbol ZTS. We'll just stick with the ticker. Closing today, $42.77, up about $1 or about a little over 2% on the day. This is the name that does, about 3,200 contracts a day, doing over 10x that, doing about 33, nearly 34,000 contracts today. So a banner day from an options volume perspective for good old Zoetis here. You can look at the stats and get a hint at what was lighting it up today. It was about 42-1 puts over calls. That should tell you what drew our eye out here in good old Zoetis. Yes, it was indeed some sizable put paper. In particular, it was the March 40 puts. I said they did a total today of 33,486. Well, a whopping 31,976 of those contracts came in this mega put trade. It started off in one block, paper selling about 26,640 of these March 40 puts for 40 cents. Again, one mega block. As the day went on, a total of just a tick under 32,000 went up. The sales started earlier on about 50 cents, and then they worked their way down, as you might imagine, blasting out this much premium. Also, the underlying rallying all the way down. So 40 was actually the worst of the prints. They got some higher kind earlier on. Looking around here, didn't see any real stock of any size with this one, so it appears to be also open interest on the strike is 109 contracts. So clearly this is opening paper. And looking here, it's pretty much an interesting level right around the 39.50, 39.60 levels where they're drawing their line in the sand. And if you look at a recent chart of good old Zoetis, ZTS, the flash crash of August notwithstanding, this is kind of right around their recent one-year lows, right around, they got a low of about 38 and a quarter back then. So it'd be a little bit south of 39.5 handle, but not too far. And certainly that's pretty far off their highs of about 55 back in June for this name as well. So our friend here clearly wagering on some near-term upside in this name. And if it doesn't happen, well, he's also happy to pick up between 40 and 50 cents. On this bad boy. Mr. Rocklobster, what's your take on some size put selling here is that Zoetis? Well, how do you pronounce that?
I don't know. It's some sort of
let's just go with Zoetis.
Animal drug company or something like that for vets. Apparently this is an Ackman stock. And you know how we profiled that massive strangle sale in VRX a couple months ago?
Oh, I remember that. I'm sure our friend there hasn't forgotten that one. He's still wearing that one. That was painful.
So again, not knowing it's this guy or whatever, but when somebody goes and sells, the size looks, eerily familiar, around 26,000 contracts. Maybe the guy wants to draw a line in the sand and get long again. So, and just speculating who it is, but I don't know how many guys want to go plunk down and sell 26,000 puts in. I'm just going to call it Zoetis. A lot of people in my chat, actually not a lot, but several like this stock. Has good growth, and the animal drug thing is a growth industry, I guess. Nobody seems to complain too much about what drugs cost for animals, but they complain a lot about what drugs cost for people. So, and I think that's kind of the MO for this particular company. But I'm just saying it's a pretty big line in the sand at $40. Boom. You own 2.5 million shares.
He pretty much owns it all at that point. South of the 39 handle. He's wearing himself some Zoetis. We'll see how that comes to pass now that you tied it in with our friend, the strangle seller, who is lamenting the south leg of that strangle to this day, I'm sure. We'll see if perhaps he has a better track record out here in good old Rio, or if he's going to be wearing this one for quite some time to come as well. We'll mark this one in the to be watched category as we keep on moving on to our next name / victim / celebutant. Call them what you will here in the old odd block. I'm still not sure if it's a prize or indeed a horrible thing to be named in this segment, Mr. Rock Lobster. As we move on to Rio Tinto PLC, this is an ADR, in case you couldn't guess by the name. Ticker symbol Rio, RIO, closing today $29.11, up about $1.74, a little over 6, about 6.5%. This is the name that does just a tick under 4,000 contracts a day. Again, doing some decent volume, about 28, nearly 29,000 contracts going up. This time a little bit farther out, a little bit farther away from home. It was in the July expiration cycle that caught our eye for some pretty sizable paper. We started seeing this going up. It was the July 22 half 25 put spread going up 10,000 by 5,700 times when we first saw it. Paper, it looks like selling the 25s, buying and probably buying to close the 22 halves, doing it for $1.20 on the 22 halves and about $2.10 on the 25s. About a total of 12,000 by 5,700 going up. So a few more going up, nearly 1 by 2 here on this spread. Open interest about 11,500. Surprise, surprise, on the July 22 halves, and about none, a couple hundred on the July 25 puts. So clearly it looks like perhaps a bit of a roll up with perhaps a little bit extra. There's about 500 over the open interest going up here. So perhaps someone else piggybacking after the fact, but it does appear like it's a bit of a close and a roll up. This name has been in rally ho mode of late. Our friend's taken off the 22 half strike where he's probably done all right there, reestablishing the short now on the 25 strike and doing it about 5,700 times. Looking at a recent chart, again, didn't see any other underlying or anything else going on with this one. And looking at a recent chart, this one thing has been in rally ho mode from about the 23 quarter level back in mid to late January. It's rallied almost 6 handles since then. So that 22 half strike was looking kind of dangerous back in January. Now looking pretty far in the rearview mirror. So he feels comfortable reestablishing at a bit higher up, a bit meatier strike, and doing it about 5,700 times. Senior Rock Lobster, what's your take here on our friend keeping the party going, rolling it up here in Rio Tinto?
It's feeling like a roll up. I was looking for that volume. I couldn't see it, the original piece of volume. So it just feels like they're rolling up. They're not doing as many contracts, but my guess is they're rolling up. The trade looked, fairly bullish or as a way to sell volatility one way or another. So, and we've seen a couple of these where the commodity stocks like the miners, copper drillers, copper drillers, gold drillers, silver miners, all these have been, I keep saying drillers, I mean miners, but they've all, they seem to have some sort of bottomed out, at least the equities have, short term. There's been a lot of profit taking on this stuff. As far as, people went in, just sold puts out of the money, and it's worked out well. So I just think this is a good old fashioned, I'm going to take me some money and do it some more.
Keep the party going here, but unfortunately we only got one last name to keep the odd block party going, and this is out in Prospect Captial Corporation, ticker symbol PSEC, P-S-E-C, closing today just a tick under $7, $6.95. If you're saying to yourself, all these other names are just too rich for my blood, I want a sub $10 name, well, we got you covered here with PSEC. Closing the day actually up about 13 cents or about nearly 2% on this little baby name here. His name does about 2,000 contracts a day, doing a fair bit more than that today, about 27, nearly 28,000 contracts today. And where did we find our attention alighting out here in good old PSEC? Well, not just in March, not even in July, but far beyond that, listeners, this time all the way out to Jan 2017. And it was the 5 handle that caught our eye out here today. Yes, the $5 strike coming in. We talked about a lot of put selling and put rolling. Now we got just straight up put buying. In particular, the Jan 2017 5 puts going up. And we first started seeing these about nearly 4,000 times, 3,778 going up. Paper buying for 85 cents. As the day went on, the volume continued to the tune of about 11,000 going up on this strike. For ladder kind, we don't have on all the prices. The initial kind went up in one block. Over there on the ISE marking sweep, no stock again. So pretty much 3 untied trades going up here. So these are either straight up spec or probably more likely a bit of some size downside protection. There was some activity of interest in a few other strikes as well. It seems like it was kind of puts du jour out here today, Mr. Rock Lobster. About 4,000 of the Jan 2017 2 half. Yes, listeners, the 2 half puts also going up. That's on open interest of 1,400 contracts. 20,000 open on the 5. So I suppose there could be a bit of a roll going on here as well. Why you'd roll the stock at $7, why you'd roll from the 5 to the 2 halves, I have no idea. Also about 2,500 each of the AUG 7 and 8 puts going up today. Both of those opening because there's no open interest on both of those strikes. So a lot for us to chew here, Mr. Rock Lobster. First off, what's your take on these 5 puts opening or closing, and then getting on to some of these more ancillary strikes? Was it a put palooza across the board? Was it one of our, mega time put stupid here? Were they buying all of these strikes? Was that a spread going up in AUG? What's your take on all this fun put paper here in PSEC?
it looked like there's possible that one chunk was a close or part of a close, but then all the other paper, they just bought everything. Volatility went up like 20 points. So I don't know what the deal is. It's some sort of financial company, kind of bouncing off of really low levels. So they're either locking some profits in or they think a whole lot of bad is going to happen on this. But you look at the vol. I mean, it went nuts. So anyway, I thought it was quite a put purchasing palooza in that thing. And I have no idea what the company does. It looks like they do some sort of financial engineering type stuff. So, but somebody's buying an awful lot of puts and they drove the vol up 20 points. That's all I know.
Yeah, this is, you're right. I'm digging into some of this paper as we're talking here. And even the AUG 8 puts, which are $1 in the money, they were gobbling those up for 225, a few thousand times there. So you're right. It was pretty much a put buy-in palooza, pretty much same thing going on here on the 7 puts, gobbling those up as well for about $1.20. So I was trying to be charitable with them, maybe some sort of weird at the money, deep in the money put vertical. But no, it's a straight up palooza. This kind of screams to me, Mr. Rock Lobster, of, some of that software we've seen of late where, you come in and, you express your outlook to the software and it uses options to get you effectively, longer short deltas, and it spreads it off across multiple things. A lot of this software has this belief that you can execute across multiple strikes and you somehow get a different price, or also perhaps trying to split strikes and things like that. So there are a few reasons why, as we've discussed infamously in the past on the show, why you may think about doing stupids. These ones are, shall we say, a wee bit funky, and the strikes are weird. 2.5, 8 handle in the AUG, so the size is weird. Yeah, the whole thing is, again, that's why we call it the odd block. A lot of weird paper going up. Let us know what you guys think, listeners, of what's cooking off. Why would you buy perhaps a $1 in the money put in August, and then also a 2.5? Actually, no, that's trading $7 now, so even more. About a $4 out of the money put here in Jan. And do it in size. Maybe you have some ideas why you want to do that. To me, kind of scratching my head, which makes the odd block fun. But of course, it's Monday. It's that time of the week, listeners, where we move on into the Uncle Mike portion. He gets to take the reins. I can take a bit of a rest because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. Like the name says, this is the portion of the show where Uncle Mike puts on his smoking jacket and his finest velvet slippers, slips on down to the old roaring fireplace, stone tablets and bubble pipe in hand, and proceeds to dispense some options, wit, and or wisdom. Uncle Mike, which is it today, and what do you have in store for our listeners in this special edition of the strategy block?
I always try and do both. Never want to disappoint our loyal, lovely listeners. Today, what I want to talk about is on our traditional wheel trade, when you sell a put to get into something, what strike price makes the most sense to actually sell as the covered call? Now, let's do a little bit of a review on this one. The XYZ stock's trading at $35 a share, and you would love to own XYZ stock at $30 a share. You think it might come down to it, but you want to get paid for waiting. So the concept is that you sell a 30 put, you get the stock put to you, and then you own the stock, you get paid to buy the stock where you were planning on owning it anyway. Now, let's do some reviews as to how and why the wheel trade might work. Now, the wheel trade means, we've talked about on the show, the Wheel of Fortune, Wheel of Fun, whatever you want to call it. At RCM, we have a triple income portfolio that's kind of based around this. But nonetheless, let's say that you sell a put and you get the stock put to you, because this actually happened to me today. And at what stage do you sell a covered call? Should you stay long the stock? Should you just get out of it? What do you do? Well, here's how you make the decision. Number one, you should kind of have a plan before you even put any risk on the table. Know your exit before your entrance in any trade is what I like to say. And on top of that, you're much more inclined to make logical, rational decisions when you're in control of your money. The second that you hit the trade button, whether you're selling a call, buying a call, whatever, as soon as you have market exposure, whether you're a degenerate premium buyer or a degenerate premium seller, I still have yet to figure out which one is which, but not, after 500 episodes. But nonetheless, the second that you become degenerate, so to speak, you lose control of your money. The market has control of your money at this point in time, not you. So it's harder to make decisions when someone else, i.e. the market, is in control. So what I like to do when I'm selling a put to get into a stock is, number one, I like to wait for the stock to have a dip. Once the stock has a dip, then at that stage, implied volatility is typically higher, and I can sell a put either further out of the money for what I like to think of as a good price, or I can sell something a little bit more close to the money for even more juice if I deem that the right way of getting into the stock. So step one, I like to look for a dip in the stock and then to sell a put expecting a further dip. Now, once you actually, and if the stock goes higher or stays the same, the put expires worthless, you move on and you made your money. Or if you do what I do, you hopefully just get out of the put when 80% of your premium has been realized. So for example, if you sold a put for $1, once you have the ability to get out of that put for 20 cents, I would suggest taking advantage of that opportunity and moving on. However, let's say that the stock goes down and you wake up on Monday morning along the stock like I did today. Now, what do you do? Well, you have some choices. Number one, you can just get out of the stock and say, okay, I'm done. Yes, it went down. I really don't love the stock as much as I used to. It had a bad announcement, that there was a technical breakdown, whatever the case may be. I need to get out. So that's one choice with which you have. Now, here's the dream of what you hope happens. You sell the put at the 30 strike, let's say. You get the stock put to you, and then on Monday morning, the stock gaps up to $30.65. So you then have the ability to get the stock put to you and be profitable from where you got it put to you. That's the dream. Doesn't always happen that way. So with that being said, I like to have a general idea of where I want to go if the stock's going to be put to me. Now, if I know that this is a stock that I want to hold on to, because if it goes down to 30, I think I want to hold this for the long term. I think that is a steal. I want to stay in that thing. I'm just going to hold the stock. But most of the time, I'm not that much in love with an individual stock or an ETF for that matter. So what I'll do is I like to collect income. And so as I'm collecting income, step one, I sell the put and the stock gets put to me. At that point in time, do you sell in the money, at the money, or an out of the money covered call? And my selection at that point in time is an at the money. Here's why. The stocks come down in value even more. So implied volatility is higher even more. You're not going to get more juice anywhere than an at the money premium. Yes, of course, you can get better volatility perhaps if you sold an in the money covered call, but where you're going to get the most juice, meaning extrinsic option value, meaning the stuff that decays, is at the money. So if I'm if I'm trading for income, then I want to trade for income. And by doing this method, so to speak, you're going to have higher implied volatility because the stock's gone down, and the at the money option is going to give you the most juice. So what I would recommend doing, if you're looking not to necessarily be married to the stock, but you want to collect income, I believe that step one, sell the out of the money put. Step two, if it gets put to you, try and sell an at the money covered call. And then if you get called out, that's fine. But if the stock keeps going down, at some point, you have to manage risk and get out of it. Or you can continue to roll down the covered call as it goes lower. And that kind of hurts some of the sting, so to speak. But most of the time, I think just getting out is a better choice and buying to close the covered call. So with that, I turn it back over 2, the 500 episode veteran, the host with the most, the man with more shows on his network than America has exchanges. Oh, wait, not quite. Mark Longo.
Close to it. The exchanges are catching up. If they get into the few thousand level, let me know, and then they could challenge me, and I would gladly cede the throne because I would probably need a bit of a rest at that point. Speaking of a bit of a rest, we are not going to take one because even though it's Monday, you guys send in all sorts of crazy questions and comments. I'd like to give you guys usually a chance to shine on Thursday, but we've got a little extra time today, so let's have some of those listener questions fire off today in a special Monday episode of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, like the man said, this is the Mail Block portion of the show where you guys get to take the reins, direct the questions, the comments, the insights, the biting, scathing remarks, all that fun stuff we love to hear from you guys. Of course, you guys can reach us a variety of different ways. Now, as of last week, via the chat. So if you are listening live, you have to log in, though, to post questions. I know a lot of you guys like to just stream and not log in, which is fine. We love you guys listening however you like to listen. If you do want to ask a question live, though, you do have to set up a Mixler account. It's free. It's easy and usually comes with setting up the app, but if you don't want to go to that hassle, I know sometimes people have too many accounts, they don't want to deal with it, I understand. Then you get a stream the way you like that too, and of course you can also reach us via all of the usual outlets. A lot of you guys like to follow us on Twitter at Options, so you can ask us questions there. A lot of you guys like to do that. Of course, Facebook, we're the Options Insider. Over there on StockTwits, just Options Insider, or the old-fashioned way, questions at theoptionsinsider.com, or of course you can just surf on over to the mothership, theoptionsinsider.com. Leave a comment on the feedback form there, or a question, or post a comment on the articles. No shortage of ways to reach out for us, and most of that is actually baked in to the mobile app, with the exception of the live stuff that we are working on that. I touched on at the top of the show our question of the week, and it's off to the races already. We asked, of course, how do you prefer to trade options? Earning announcements using options, and 19% so far weighing in, saying long premium, which is more than I suspected to begin with. I know a lot of our listeners and followers like to lean towards the dark side. Only 13% of you saying short premium, and the wise 56% of you saying you avoid earnings altogether. So I take my hat off to you. If you don't want to deal with those rocky waters and those turbulent times, then you are indeed savvy folks. And 12% saying other. Only a handful having deigned to leave an explanation. If you're going to put other, tell us why. We'd love to hear from you guys on that stuff as well. Moving on, we got a bunch of questions. Let's see how many we can hit. We got a follow-up here from one of our discussion topics from last week. This one came in from Alex. He was our friend from, I believe, Sofia, Bulgaria, by way of, I think it was Houston. So not a combo you hear very often. He was asking us about why, or should he write, I think he wrote a 1-year put out in good old LinkedIn, and we were talking about the merits of writing longer term puts versus shorter term. We tend to lean short term, but Uncle Mike had an interesting example. I've forgotten the name, where you wrote about a 9-month put out there, and we got into that discussion. He followed up with, thanks, Mark, for the funny intro of me and featuring my question. I felt honored to get my simple question dissected so well. I loved it. Well, you're welcome there, Alex. He goes on to write, you started the discussion with, there are not that many scenarios to short long-term puts as a way to enter into equity unless there is some extreme volatility distortion where the 1-year put is extremely bid from a volatility perspective. My follow-up question then is, doesn't the 1-year LinkedIn implied volatility qualify as such an extreme volatility scenario distortion? He sent in a screenshot here from OptionXpress. The highlighted region is where I shorted the 25 delta put. Maybe we won't put the screenshot in the notes in case he has some identifiable information on his account or anything. But we'll just describe it to you, LinkedIn. He did send a nice screenshot here. He says, I would suggest an episode. He said, I shorted the 25 delta put and at the money implied vol is at its highest ever. Definitely, I would suggest an episode on commission fees and slippage costs, one of our other shows, Bootcamp, and why even with those, it is still better to do shorter term versus longer term dark side trades. Cheers, Alex. Concisely, a little bit late for that, but still good. Vega, Theta, low commissions, and slippage costs are working for me in this one. He did show a nice little chart showing the longer-term range and highlighting where he sold. And you're right. I mean, I wasn't saying you can't shell longer-term puts. Certainly there are use cases, and it is indeed elevated here in the back months. But if even in just looking at your basic screenshot, you can also see that the narrow-term contracts also a wee bit elevated, shall we say, from a vol perspective. And of course, when you're talking about that now, you're writing near term, you're writing consecutively. Looking at the term structure here, they're baking in lower vol levels for the middle portion of that term structure. So you have to expect something similar to unfold if you're consecutively writing those puts over time. So you could indeed not really count on those initial juicier levels of premium to continue the whole way through the year. So there could perhaps be a bit of a come off there. And of course, the commissions are an issue. But if you are happy with this right and you're doing well on it, then by all means, don't let us talk you out of it. If you're happy with it. In general, most times, I'm going to say not even 9 times out of 10, I'm going to say 8 out of 10 or so times, you're going to be better off writing the narrower term contract and doing that subsequently for the entirety of the period. But there are moments, and it sounds like you're happy with this one, that could matter. I'm trying to remember, Uncle Mike, what was that name you were talking about the other day where you wrote that longer term put, and how's that working out for you?
Hey, it's good. TLT, we're just looking for a safer way to get a little bit of income. And the reason that I went with a 9-month put in that one instance was just that in order for me to get some type of more near-term income and trying to do something, I'd have to go too close to the money. So I felt more comfortable going longer term in that one instance. So it's generally, I would say, 2 months is probably actually, maybe 6 weeks is probably as far out as I like to write generally. But there are instances where there are exceptions to the rule.
Yeah, and it did seem like this LinkedIn longer-term 1-year premium is fairly hefty. So if you want to just set it and forget it, and you're okay with tying up that capital for that entirety, not really going to do anything else with it, and selling a put, not a free lunch, you're going to tie up some margin, so you have to buy the stock in case it does drop to that level. So you're going to tie up some capital for the entirety of that year. If you're cool with doing that, and you like the levels you're getting, then by all means, just be cognizant of the fact that you're not maximizing that theta curve. You're not going to get the lion's share of that decay until that option gets much closer to the front month. So you're going to be sitting on that for a little while. But if you're okay with that, then that's cool. Mr. Rocklops, I don't think we had a chance to really chat with you about it that much. Are there scenarios where you tend to favor a far off put like a year or more versus a front month, or you're pretty much entirety in the front portion of the curve for selling?
Yeah, I think you got to look at what your yield is, how much you're really going to make, and what your expectation is, and things like that. Because there is actually looking at the index sometimes when you have like in the SPX when the vol's 30 and you're looking at a 1600 put is like $9. Well, when volatility is high enough, there are puts you can sell. So, and the farther out you go, the more juice you can get for them. So it's just to me, it's just a use of capital thing where you sell the put, how much margin is it going to be, and how much money you're going to make on the margin. I think that's kind of so if it's a cash secured put, it would make sense if you figure, the yield on margin might be, like 22%, then, you got to be realistic. It's hard to beat 22% or 15% in this market for a 1-year hold. It's not going. It's almost anybody would take 15% a year and be pretty happy if you can compound it. So that's what I would think about that. You definitely got to look at yield versus margin and the risk required. So that's how I look at that. If you write that out of the money put, and you're like, oh wow, I'm making $1, but the return on the margin I have is only 1%. I'm holding it for 9 months. That's, it's hard to do worse than a treasury bond, but that's kind of what you're doing.
That's like an odd block style where they roll out a year and they do it for 12 cents, something.
Exactly. We're going to capture yield.
12 cents for a whole year. Go for it, baby. Yeah, we've seen a few of those in the old odd block. But yeah, it's nice to say if you're happy with it, you like the return on margin, you like the set in and forget it approach. There is some upside to the lack of having to really babysit it. It is kind of a set and forget trade at that point until, of course, that put or that strike gets near to the game. And then, of course, you have to decide whether you want to keep it on or you want to roll or things like that. But if everything kind of holds the course, it is kind of going to be a pretty boring trade for the most part. Some people like that. They like to move on to other things and just kind of set it and forget it. So if that's your approach, I know a lot of some money managers like it that way, like to just set it every quarter or so and then just adjust their covered calls, what have you. If that's your take, you don't have time, you're a busy guy, I understand it. But interesting stuff nonetheless. Good conversation. Get some good ideas for a boot camp show as well. Maybe we'll take you up on those. But now it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we tell you what we're watching for the rest of this week. Before we get to that, let's do one last quick check-in here on our after hours name of the episode. Good old Fitbit is at the end of the fitness band. Well, if the market is correct, it doesn't look too good for our friends over there at Fit. They're off. Remember I said they were pricing in about an 18% move here with the old at the money straddle. As it stands now, it's off about $2.55 or off about 15.5%. So creeping up on that straddle south of the 14 handle right now, $13.97. So the market clearly not loving what Fitbit is selling, or perhaps not selling, as the case may be. So a lot to watch there. Not too much left on the old earnings front. We do have a few numbers this week. I got your old jobless claims and consumer sentiment, all that fun stuff. But let's move away from macro for a second. The Viceroy isn't here, after all, and instead turn back to the hinterlands of good old St. Charles. Uncle Mike, what are you watching for the rest of the week, sir?
Well, from a technical level, the S&P right now is higher than it was, or today was kind of a big day in that it was higher than it was on February 1st on the close. The last, and not by much, by like a point or so, the last time with which it came up to that level before February 1st was on January 13th. So you could almost make a case that we have a triple top going right now. And I think tomorrow is going to be a pretty pivotal day in terms of where the market's going to go. If we have another up day tomorrow, then I think the bulls are going to be making a case making some news for the case that they will be having.
Making some news for the case they will be having. Well, easy for you to say, sir. We shall instead turn over to the hinterlands of Maine. Mr. Rock Lobster, while you're drying your tears over your ice rink, what are you keeping an eye on for the rest of the week, sir?
If this rally can get sustained here, that's my biggest. Is it all? I mean, the oil tail has been wagging the market dog, I guess, to just butcher that metaphor or whatever, for a while. And I guess if oil prices stabilize, everybody thinks everything's cool. So I think that's been driving pricing short term, while there's been panics about all kinds of other things. So I think that's the big. I'm looking to see if it can continue. That's all.
All right, listeners. That music means it's time for, unfortunately, the end of the old program. But before we go, as always, let's check back in one last time with my cohorts here, my partners in crime, see what they're cooking up that may interest you. Starting off, let's go back to the sleepy land of St. Charles, where we find Uncle Mike Tosaw. Uncle Mike, let's talk about going long and what else is cooking in the land of RCM Wealth Advisors.
It is IRA season, folks. If you need to make your deductions and contribute to an IRA, contact me. If you have as little as $100 a month to invest, I am happy to work with you. Most of my clients, I'd say probably 98% of my clients, are all online, so I have the ability to do such things. Give me a call, 312-212-3531, or send me an email at mtosaw@rcmfs.com.
There you go, rcmfs.com. Check it out to learn more, listeners. And before we go, Mr. Rock Lobster, what's cooking in the land of the pit?
Beginning boot camp starts Wednesday. If you want to learn about options, this is the time and place to do it. Basic beginning boot camp. And I think it's it'll be a good beginning experience for people. We'll go through just about all of the basic stuff, just even looking at orders, volatility, understanding what calls and puts do, all that kind of stuff. Try to demystify the simple stuff. That's what we got.
There you go, listeners. If you want some basic stuff and you're into copyright infringement on our boot camp show, surf on over, check out the Option Pit Boot Camp, where they will learn you some of that fun options stuff. And of course, while you're listening to Uncle Mike and listening to our show, check out Uncle Mike over there on Amazon. Go Long is his weighty tome on all things options and market related, so you can check it out. I think it's like $3 or $4, so you get a nice deal on it over there on Amazon. Mike Tosaw, Tosaw. Check it out if you haven't done so already. All right, it's going to do it. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, sending in such great questions, and for the growing cadre of you who are streaming live. We'll get this down to a nice schedule, make it really easy for you guys to find us every Monday and Thursday, and some of our other shows as well, perhaps on the network like Vol Views and others. We'll start rotating into the live schedule. So stay tuned for that, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.